We're reporting results today for the year up to 30th of June 2012, and for us the results really mean a point where we draw the line in the sand and put the past year behind us and move on. So in terms of the overall key things that we're focused on, first we've renewed our bank facilities for a period up to December 2014, so we've got a very strong underpinning to the business so we can really look forward, and that's hugely important to us and gives us a strong basis for the way we operate over the coming years. Secondly, we're announcing that we've made really good progress in terms of how we've restructured the business and some of the costs that we've taken out. So again, that strengthens our basis for the future. At a headline level, the business has been pretty resilient in a very tough climate. So we're announcing a reduction in revenue of about 10% overall. So revenue's coming out at 208 million. And that represents, I think, a market which is relatively tough, but across our businesses where we think we've performed pretty much in line with the market. So a number of our services are in the nature of compliance or regulatory services, so audit, tax compliant, internal audit, and those markets have held up pretty well. Pricing is tough and clients are challenging, but those markets have held up well. Where it's been more challenging, like everyone else, is around transactional businesses, so corporate finance or recovery, where it's a business dependent on the economy and dependent on activity. We've found there it's a very competitive market, and there's just generally less activity around, which has meant the revenues come off a little bit.
It's a fairly frank set of results, and the chairman says the last year has been totally unsatisfactory, to quote his words there. What do you think went wrong in the last year? Some people have said that Tenon sort of overstretched its core competencies. Would you agree with that?
If I look at the challenges of the last year and how we've described those, I think we've matched up to a set of challenges caused by some rapid growth. So RSM Tenon got itself to a point where, after a series of acquisitions, cost had got ahead of revenue, and we needed to take some action to bring that back in line and really make the business work. So in the chairman's statement and the CEO's review in the accounts, we've been very clear to give a proper picture to our shareholders of what has happened and to be honest about how we've dealt with it and what happens going forward. So with a lot of acquisitions, particularly in the period from 2008-2009, the business grew quite substantially. And what came with that was an increased number of offices, increased levels of management. And as we look back, we don't think the integration of those acquisitions was completed as fully as we'd have liked it to have been. So the action we've taken has, I guess, gone from the top of the business right through. So first, we've made substantial changes to the board and to management. And if you look at the board now, you'll see that 4 out of the 6 board members from this point have changed. A further board member, Bob Morton, has announced he won't stand for re-election at the AGM. So effectively 5 out of 6 board members have changed. We've also announced the appointment today of Nick Page to be a non-executive and chairman of the Remuneration Committee. Below the board, we've also made substantial changes, so the management team that I work with has changed significantly over the last year. And that kind of refreshes how we look at the business and represents part of a new start. We've also then made changes in terms of cutting costs, so unfortunately we've had to reduce our headcount. Headcount's the main cost of an accounting firm. So we've taken out about 12.5% of our staffing overall. And that had to be done very quickly and as fairly as we possibly could to make sure we got our cost under control. In addition to that headcount reduction, which was about £17 million of ongoing cost saving, we've reduced some of our property costs and reduced some of our overhead costs to add another £3 million. So we've made annual cost savings of £20 million. You may remember back at the time of our interim results, we'd targeted a saving of £14 million. So we've done better than the target we'd set for ourselves. And that's good progress to putting the business on a firm financial footing. In the background, we've made a lot of changes to how we operate as well. So we've introduced new roles and responsibilities for everyone, including partners. We've really tightened up our operating framework, the rules about how people operate, simple things like levels of authority. We've made sure that we are very clear about how we operate and what we try to do. most important of all, as we've faced the last few months, has been to put our clients first and really concentrate on what we're offering and how we're offering it. And the great thing from my point of view is that as I've been going around and seeing clients, and I tend to see 2 or 3 clients a week at the moment, the feedback's fantastic. So our clients are getting very good service from our people. They're very positive about that service. I'm really grateful to our clients for their loyalty over the past year, particularly in some challenging circumstances. But at the heart of our business, I know that we're providing good service to a great client base. We just need to do that more efficiently, more effectively, and to keep raising the bar about our standards as to how we do that.
I notice you talk about partners, and in fact you refer to a partners charter in the results as well. Is part of taking the business forward considering a delisting?
You just mentioned partners. I mean, partners are I guess, our top level of people. We'd formerly call them directors in a company structure, but most of our competitors call their senior people partners. And there was a feeling that by calling our people directors, there was an element of confusion in the minds of our clients, but also not the real sense of grouping that you get around the partner title and the culture of a partnership. So we're a corporate, and we've got no plans to be anything other than a corporate in a listed sector. So we're fully listed on the stock exchange. But there's no reason why you can't have all the positive elements of a partnership culture in a different type of structure. So we're trying to make sure that we get the positives around a partnership culture. We've changed the title because that, I think, appeals to our clients and it's easier to understand what people do. We've been very careful to define what we expect of our partners, what we want them to aspire to, what we want them to deliver. And I think taking all of that in the round should start to drive a much more positive feel and much stronger focus in terms of what we do for our clients.
Okay. So looking forward, we've seen a few parts of the business be closed or sold off. Could we expect to see more of that happening in the months ahead?
Looking forward, I think we've got now a stable business structure. We've made some changes to it by disposing of some non-core businesses. So we've taken the opportunity to look at what makes up RSM Tenon. And the core services, audit, tax, assurance, recovery, financial management and risk management, I think are very strong and fit together well. Around those core services, there were some smaller businesses or some areas of less profitability, which we've taken the opportunity to sell. For example, selling our individual voluntary arrangement business to Grant Thornton. That was a very self-contained business, but one that really didn't have synergy with other parts of the business or those core service lines. So I think we've got a good core, and that core will carry us through for the future. It's also a core that interrelates, and so the idea is that we should be providing a range of services to our clients, and that range of services should be provided by a group of partners and staff who really understand what each other do and what those services are. So there's a higher degree of knowledge sharing, a higher degree of cooperation, and the ability to basically find the best quality of advice for the client, wherever that might be in RSM Tenon.
And on that note, you talk about reworking some of the service lines around audit and tax. Can you talk us through how that decision was reached?
Yeah, we're taking a look at our structure. Our structure is slightly different from other firms in that our largest service line, ATA, which stands for Audit, Tax and Assurance, is about 50% of the business. And we've taken a look at how that operates and how effective it is. And we decided to separate that into audit, accounts and outsourcing, and tax as a separate service line. It's not a question of creating separate silos or bureaucracy. It's more forming manageable business units where our people have a clear view about where they fit and how they report, and also putting forward an identifiable structure that really makes sense to our clients. And not surprisingly, there's a difference in a client's perception between a compliance service and an advisory service and a value add service. We just want to make sure we're delivering the right things to our clients in the most effective way, and that the structure drives that and supports it.
You don't foresee any more reduction in head count because of that?
We've reduced our headcount over the past year reasonably substantially, and it's never attractive to have a one-off exercise that reduces headcount. It was a challenging exercise to do, and we tried to go about it as professionally as possible. As we go forward, we need to be very efficient and manage our headcount effectively like any other organisation. But we wanted to make take steps to make sure that we don't put ourselves in a position where we need a one-off reduction in headcount again. And looking forward, we're much now on the front foot and thinking about where we've got gaps in experience, where we need to add to our service lines, where we've got knowledge missing. And so looking to recruit people into RSM Tenon strategically and in the right places rather than to trim down the workforce more.
Okay. So if we're sitting here in a year's time, what do you think RSM Tenon will look like then?
I hope in a year's time that we're talking about a very stable RSM Tenon. So I said that the results today are very much drawing a line in the sand and putting the events of 2012 behind us. If we look forward in a year, I hope we'll have forgotten 2012 completely. We'll be a profitable business which is seen as very stable, and we'll start to get a sense that our service lines are combining much more effectively, that there's a very clear view about the markets we focus on, which is very much around SMEs and their owners alongside public sector businesses, and that we're known really for our expertise in particular areas rather than perhaps our corporate history.